The news.
Tell us where you are.
With technology seeping into every industry and closing the time gap of how long it takes for the piece of information to be known worldwide, these following questions must be answered properly. Let's start with question number 1. How does the news impact the stock market? The news, by and large, creates an immediate effect in the stock market in the form of a lot of price movement in one concentrated period of time. Usually this comes in the form of quarterly earnings announcements for individual stocks or economic reports that will affect the broader stock market. The immediate move after one of these announcements is generally the largest, and any subsequent moves are generally a lot smaller because the market is very good with processing information very, very quickly. How quickly can new information get reflected into stock prices? As we see from earnings announcements as well as macroeconomic events, the first move is always the biggest, but not all information is instantly priced in. Sometimes you'll see an initial move one way, then a complete reversal in the other direction as the impact from the news gets digested. Sometimes what the news brings is uncertainty. And if you remember from our previous videos, uncertainty always leads to higher market volatility. And usually this higher market volatility comes in the form of swings higher and lower, and a lot of them. The change in which the market absorbs new information from the news, however, is nearly instantaneous. What does it mean when something is priced in? When something is priced into the market, it means that the price and volatility that is present in the market in this point in time is reflective of the best available information that exists in this moment. Contrary to popular belief, being priced in does not mean that the price itself will be more stable. In fact, when new information is priced in, it's actually common to see even more volatility because the new information that was announced brought more uncertainty. Therefore, it's possible to see a market that swings around a lot that is also perfectly priced. Prices come from the instantaneous collective sentiment of current value. And because these sentiments do change regularly, a volatile market means that the future price about something is uncertain, but it's still the perfect price in this moment. What are the mistakes that people make when they make investment decisions using the information presented on the news? This is one of the biggest questions that I think is important to answer because it will make or break your investment strategy. When people see a piece of news come out about a particular stock or other asset, it is common to assume that because you are now better aware of what's going on, that investment is now all of a sudden a better buy. Let's use Tesla for an example. As Tesla grew in size and more technology and information became available and understood by the public, its stock price grew astronomically because the certainty about growth and the future of the company means the stock price will rise. However, more positive information about Tesla is not the reason that someone should consider investing in it. Because remember that the current price already reflects all the possible positive and negative outcomes of Tesla's future. The correct reason to invest in Tesla is if you are betting that the future growth and earnings of Tesla will exceed that what the market already anticipates. If Tesla matches market expectations, there's actually a good chance that the stock will actually either stay the same or even go lower. This sounds odd, but there have been so many situations where a company announced better than expected earnings, but because the future prospects of the company didn't really change, the stock price actually went down. So remember, current news will not affect the future price potential in the stock. Rather, the company's outperformance relative to market expectations will drive future price advances. Now, most importantly, what is the correct way for traders and investors to use the news to improve their skills? Focus on looking at the news as a source of hype that will affect the market and see after the fact whether you think a stock or the market is now under or overvalued after the effects of the news have been priced in. Say you saw a good jobs number come out and the S&P 500 makes new highs for the 5th day in a row. As a trader, I actually may be looking to sell some stock into this new rally because there's only so much more good news that could continue to propel this market higher. Or conversely, if you see a continued selling after much news coverage regarding recessions or other negative consequences, which usually entices fear or panic, maybe this is actually a better time to buy now that the market has sold off so much. Look to be more of a contrarian when digesting news, because more often than not, markets overestimate the hype. Hopefully now you'll be able to use the news to your advantage instead of being constantly rocked around by making rash decisions because of sensationalized headlines. Hey, if you like content like this and want to see more from our channel, please like and subscribe so you can get notified when we post new content. I'm Anton Kulikov, and I'll see you in the next one. Bye-bye.